You ready to do? I think we're doing Exxon
Exxon Mobil. Yeah, it's kind
Mobil.
of funny because
Yes.
you had OXM for Oxford. Now we have XOM for Exxon.
Yes. Yes. Just a switching of the O and the X there makes a big difference, so doesn't it?
Yes.
All right. Let's take a look at Exxon Mobil. Again, their symbol is XOM, in case you got confused on that. We do see there in the, I'll say, industry of oil and gas integrated. Short is only 1.2%. Surprise on this, 67% institutional owned. A lot of people own the stock individually, which
I think
is
it's the dividend. A lot
Mhm.
of retail investors like that big Exxon name.
Yep. Well, looking at the valuations here, we do see the PE ratio is kind of high. It's 17 versus 13.6. Price of sales 1.6 versus zero point 0.7. Price of book value for Exxon is 1.9 versus 1.2. And even the price of cash flow for Exxon is 9.8 versus 5. Now, they do have a PEG ratio, which is price earnings divided by growth, which tells you how much you're paying for the future growth here. It's only 0.9 versus 2.7, so that is a positive. Now, unfortunately, year over year, the earnings are down 14.3%. The industry is down 13.6%. The sales were down 4.4%, but the industry was down 7.7%. Now, I love this because we know, like, oh, oil's going to keep dropping and dropping. Not forever. This is going to change, and you'll see more oil produced. But the 5-year earnings per share growth rate is 19.6% for Exxon versus 18.7% for the industry. So that's a positive. You get a decent dividend, about 3.5%. They use 58% of their earnings to pay that out. Looking at the balance sheet, we got a current ratio of 1.1 versus 1.2. That's good. Wow, debt to equity is only 0.2 versus 0.4. So low debt company. That's always nice when you have a company paying a dividend. You know they don't have to pay a lot of debt, interest on that debt, and so forth. We do see a net profit margin of 9.2 versus 5.3. Return on equity is 11.5 versus 9.9. Ooh, love this number. Free cash flow, $23.8 billion. Yeah, that's got to be billion versus 15.6 billion for the industry. So they're bringing a lot of cash. That tells you that that dividend is probably pretty strong. I'm not sure the history of raising that dividend, but I bet you they probably raise that dividend on a regular basis as well.
Yeah, I'd have to assume so. I mean, they've been paying that for a long time, so I assume they've increased it too. Looking at the current price here for the Exxon Mobil, their ticker symbol again, XOM, it's $116.69, 52-week range. The low here, $97.80, and the high, $120.81. Year to date, the stock's done okay. It's up about 8%, not including the dividend. So probably with the dividend up around 12-ish%, I'll call it.
What was that time frame for?
Year to date.
Oh, year to date. Okay.
Yeah. Looking forward, though, for the company, I got to December 2026. Estimated earnings per share will $7.19. Gives us a target sell price here of $119.35. So right around that current level. The big thing with this company, though, is the range of analyst estimates is huge. The low here, $5.91, and the high, $10.91. And I think the difficulty with this company is obviously the question mark around oil. Oil this past week actually hit its lowest level since 2021 when WTI fell under $55 a barrel.
And now we've talked to, like, there's a possibility that could fall below 50, which causes a short-term problem because then probably Exxon will fall and so forth. But what that does is that it increases the demand, except for in California, gas prices will fall. I say except for California. They do, but it's just so crazy in California.
Well, I got this for you here, right? So U.S. gas prices have fallen below $3 per gallon to the lowest level in 4 years. I feel like we don't notice that here in California.
I think I saw 405 at an independent station on Poway Road the other day. But yeah, I mean, it's just crazy. But what that does, if it keeps falling, now it's kind of tough on the oil companies, the producers in the short term because their profit margins shrink. But then people say, well, gosh, I'm not going to buy an EV. I'll buy, and I'm not going to buy a little tiny car. I'm going to buy an SUV. I'm going to buy something that they don't care about the gas mileage so much. Then what happens, they're producing more oil. Yes, lower profit margin, but selling more of it. And they'll make more money longer term.
Yeah, and I think it is something that should reverse course naturally. I mean,
Right.
You have OPEC that wants to make money off of this. The big reason I think oil has really struggled, well, on the other side of it, you have the issues with Venezuela that are kind of circling about. That might actually put upward pressure on the price of oil if, there is a further escalation between Trump and Venezuela.
And aren't we're
Kind of sanctioning them.
sanctioning them. And haven't we taken some oil tankers too?
Yeah.
I wonder where that oil goes.
I don't know.
Yeah.
Yeah. Well, this is kind of interesting, right? The reason that I think oil has been pressured, or part of the reason, is number one, OPEC Plus has really been pumping. And also, two, there is maybe a potential solution circling around between Russia and Ukraine. And if that does come to fruition, well, then Russia would come back to the market, which then would beg the question, now would OPEC pump more to try and take market share and keep their market share in place? That could create an even larger glut of oil. And I was kind of surprised by this, but Russian oil stored on water is currently estimated at around 170 million barrels.
Oh, wow.
So, I mean, that would then come back online as well. So there is this potential supply glut around the corner that, as you said, maybe pushes oil below $50 a barrel. But I'm almost wondering, there's a saying, buy the rumor, sell the news.
Yeah.
I almost wonder if it's now sell the rumor, buy the news, right? Like, because if it comes to fruition, I wonder if, things are already so bad in the oil market that if oil is like, okay, well, now there's nothing else that bad that could happen, and oil does turn around and go higher after that. Because I do think that oil long term is not going to be at $50 a barrel.
No, I think it will be higher because demand will increase. And you got in the newsletter the big electric vehicle boom. You got to read that because EVs are not taking much market share on the oil side. And I think oil will be around for more years to come. But on the Russia thing, I know Russia is kind of selling some of the oil through the back door.
To China?
Yes.
In India?
Yeah. So how much of that is hitting the market, as well? But you said 170 million barrels is in.
Yeah, I had
just
never seen that
floating on the
number.
water.
Yeah,
Wow.
but that'd be a lot to come back online. And when I look at this in the grand scheme of things, like I don't think I'd buy a buyer obviously now of Exxon at these levels.
Right.
But if you go out to December 2027, we'd have to wait for the earnings report to come in after this year end. So sometime in January, we'd probably get that number, maybe early February, depending on when Exxon reports. But 2027 estimated earnings per share is about 8.64. Forward PE is under 13.5. So you get a pullback, maybe earnings coming a little bit better. I mean, you could have Exxon slip into a potential valuation that would enable us to buy it. And I do think looking at oil companies when oil is around $50 a barrel is likely a prudent move because I think oil will turn around and go higher.
Yeah, and I think you want to buy it when I think Exxon's definitely worth watching. But you want to buy it when there's blood in the streets and, oh, my gosh, oil's down low, $50 a barrel. Oh, it's terrible. That's when you say, Exxon Mobil is now at, I don't know, down 20%.
And we rely on the analysts many times, but sometimes I'm going to say it's not always the best solution. I say that because when oil's low, like $50 a barrel, their estimates aren't accounting for the fact that oil could go back to $75 a barrel. So then all of a sudden oil moves back up and those estimates are way too low. When oil's at $100 a barrel, it's like, yeah, they're going to make tons of money. And then it comes back down, and it's like, well, your estimates were way overvalued.
And that's why you looked at the range, because when you have the range so far out of whack, or such a large range of almost double, I think it was, that's when it's like, wait a minute, there's some problems here with this estimate. Some analysts are getting it right, and some are just like not getting it right.
The guy that's at $5.91 for 2026, I think, is estimating that oil will be at $50 the whole year.
Yeah. So, again, I think we're going to say it's a watch, not a buy yet, but I think you could have some opportunities of that down the road.
Maybe early 2026, there could be some opportunity there.